Hey, everybody. All right. Rate Decision Day by Jerome Powell. No rate cut, as many people probably projected. What the hell's going on with mortgage rates? Because there's something I'm actually tracking that is completely different than what's being talked about. And as you've heard me talk about before, I think that mortgage rates are going to stay stubbornly high for a while, though. For those entering the housing market, this is healthy. And I'll share a little bit more about that for you as well as we talk a little bit further on this short little live to you today. So make sure to subscribe to the channel if you like the content that I bring, the authenticity to getting a mortgage. And if you have questions that you would like answered on a future live, please share those with me so that I can address them for you coming up here soon. All right, let's actually talk about what is keeping mortgage rates up. If you look a little bit more from a macro level, what we got to understand is that government data on inflation, there's some key sectors that is lagging. And one of those is related to housing costs because their data has to incorporate data from the past. So what you want to be aware of is that actually in real time, the BLS has released data that shows that new tenant rents, so those signing a lease right now, is down 2.4%, which is even further from where quarter three 2024, it was up 1.6% year over year. That is the first time in over 15 years we've seen this kind of movement. So why will it take a while to infiltrate? Because the data the government releases related to certain sectors of inflation is lagging. Therefore, keep an eye on new rents. Those of you that have a rental properties and they're becoming later in the lease stage, it's time to change the mindset about, might you want to pause rate hikes on your rents? Might you want to offer a little bit of a discount? If you got a good tenant, where is the peace of mind at? And I think that as a landlord, peace of mind comes from taking care of people and providing discounts for those that have stayed there rather than just seeking top dollar in a market where you are seeing rentals maybe sit a little bit longer. Renters, because of more stock in Denver on new apartments, being a little pickier. So if your place isn't shiny, you might want to put a little bit of money into it, but that doesn't mean you're going to raise the rent just because you do that. Rather, you're just going to bring it up to the neighborhood standard. So keep an eye, because actually Jay Powell talked about this today as well. He talked about rents and the lagging component of the rents, but they're seeing the data as well. So as those continue to show signs that on new rents coming down, we would expect to see that have an impact on mortgage rates. And from the geeky technical side, what I'll share with you is as I look at the mortgage-backed security market here, I am watching certain levels of trading and moving averages on mortgage-backed securities. And if we can get past this little bump, the other day I was talking to somebody and we were talking about an FHA at just around 6% if they paid a point, and a conventional at I think 6.8 if they paid a point, and in each case putting down 3%, FHA 3.5%. So this will kind of help me transition into talking about something that came up this week, because these folks had great credit scores. Their scores were 720 and 740 respectively, and they make about 250 a year combined. So why would I be talking to them with minimal debt about thinking about FHA over conventional loan? It's not about should they, or I think they should do FHA over conventional loan. It's not going to be my mortgage. At the end of the day, they're going to be making the payment. What you want to understand about an FHA loan is if you make a 3.5% down payment, 1.75% of it will be financed back as upfront mortgage insurance premium. So technically you have 1.75% of equity after closing. So in this example, which was $600,000 home, that would have put them $10,000 worse off day one with that FHA loan because the balance was higher from the financed upfront mortgage insurance premium. Does that mean the FHA loan is worse? Well, the rate was more than 3/4 of a point less. The payment, $300 a month lower than the conventional loan because of the rate on the conventional, the mortgage insurance on the conventional. Now you got to draw out a little bit further into your future, because as I showed them, and they brought up a great point. Well, Ray, if we don't buy down the rate, what if we take that 1% discount fee and we put it towards the loan amount? So the net differential, $300 payment, in that example, they owe $5,000 less on the conventional loan because of putting that towards the balance rather than buying down the interest rate permanently. However, they, with the FHA, every month in their checking account would have extra $300 a month because the payment is less. Now, if they did apples to apples, paid the FHA as they're going to pay a conventional if they take out the loan, and remember, this is just for knowledge. They're going to be buying in a few months. So all of this is meant to help rattle their brains. So when they go under contract, they decide what's best for them based on many variables talked about leading up to the contract, rather than here's your rate, you're pre-approved for this amount of money. That's just not how it should work when you're going to go into debt for 4, 5, 600, $1 million. Talk about longer term financial impacts to your life. So $300 a month less the FHA loan. If they budgeted the same and put it back into the FHA loan as principal every month, ironically, after 60 months of owning, now remember, they started off $10,000 behind because of the FHA upfront mortgage insurance premium. After 60 months of owning, if they sent that $300 monthly savings back to the FHA loan, they would be $20,000 ahead, meaning they will owe $20,000 less with their FHA loan than that conventional loan, and they would have spent the same amount of money every month for those 60 months. Does that mean they should do FHA over conventional? It does not necessarily mean that. It's just more about the awareness of learning that if you talk to a lender and they say, you have great credit, you have minimal debt, conventional is definitely the way to go. Get more information. Ask them more pointed questions. The great lenders will teach you. They will show you the numbers. They will talk through these projections. They will talk through cost of borrowing over time, because these are the things that can help or hurt your money working for or against you longer term. And as a great book I'm reading right now, Richest Man in Babylon, it's something about making money work for you so that you can build wealth for your family. Hey, I certainly hope this helped you out today. Post some questions on what you might want to see for future lives topics. And this is off the cuff. This was not planned. And make sure to check out other videos here on my YouTube channel. If you like this type of content, make sure to subscribe. It makes me feel good, but it makes me know that little channel out there like this is getting to people. And my real hope for you is that it's helping you level up your knowledge as you pursue buying a home in 2025. Be well, and we'll talk to you soon.